Welcome back to Ferocious Education. This is Ed. Today I'm going to be talking a little bit about why we might see a little bit of green, or the bleeding might actually stop and we should be seeing a bit of recovery a little bit today, later on past today. Now, the market has bled quite a lot in the recent day. It has fell almost around 2,000 points, a little bit short than 1,900. Now, taking a look here, there's a lot of indicators. I'm going to go a little bit on it. So I've added a bit of into additional indicators to try to understand the market even better. So the further you go, you always learn something new. And here, what I've added is the moving averages. And you can see for the most part, these moving averages, except back in the March dip, that the stock has been trading very close within. So the trading averages is this one here highlighted. And you can see that around the 8th of June, which is around the region around Monday, Tuesday, it has reached its peak. And that was understandable, and it actually dropped quite a bit to fix itself. Now, the line in blue, dark blue, which is in the middle here, is the middle moving average. And what a lot of the time, you'll find the biggest movement going in from the upper to the middle. And that's a big significant move here for the last since almost April. Now, this movement has been caused a little bit by the news of a gloomy a bit recovery or slow recovery. But I believe that action is a bit priced in. We still see a lot of recovery in different states. Florida and Texas is a little bit hit hard, but we already known that for quite a bit of weeks now. So it's nothing new. They haven't hit high score records that are unbelievable in magnitude, but we basically understood that risk from a bit ago. So I don't believe that we're going to be seeing a massive March dip at this level. So what we can see here in the William %R, which basically identifies an oversold or overbought market, is that it has dipped significantly. And let's take a quick look into the times where it has dipped to around this level, which is around 96. Now, the William %R goes from 0 to 100. And so going to 96, that's almost on the highest level of oversold. So looking around here, it has hit before on the 23rd of March, and the following day we saw a bit of recovery. Again, a little bit around here on the 21st of April, it was a little bit more on the neutral side, and it hit another day of recovery. Towards the 13th of May, it hit a recovery afterward. And so what I notice a little bit is there's a trend, as I mentioned before, in different stocks. We usually get red patterns followed by a bullish kicker that reverses it. And this red have been expected for a little bit while here, and today was just very ugly, and it accelerated that process. Now, we have one of two things that might happen. We might see a little bit of a reddish day, although that's a little bit unlikely, and I'll go in a bit now. Or we can start tomorrow, or we can start seeing a little bit of recovery, which is a bit more expected. Now, looking into here, into the unbalanced volume, we can get to start seeing that there was a massive dump of around almost 1 billion stocks that has gone out the market, and the volume has increased. Now, what's happening here is a lot of panic selling, so weaker hands, and that's what I call this movement. Now, looking back into all this, I would like to look a little bit into what the kind of patterns that we're going to be seeing here in a little. So what I'm going to be drawing here, just a bit ignore the other lines. Oh, of course, as well, the red line here is the VWAP, and it's actually touching it right now. It's still above, so that's still a good sign. Going to be decreasing a little bit of here. Draw. Okay, so drawing over here. Let's draw channel. I'm gonna stay somewhere up. Wait, let me go around 6 months back. A little bit of a better situation here. I'm gonna be drawing a channel, which basically will be testing different supports and different. Trying to figure out which levels this oscillates. So we can see over here. I'm not gonna go to the red, but I'm gonna go to the second dip here and try to match it. And then I'm gonna extend this towards a little bit towards the tops. So that's a little bit tricky here. Okay. I would say that this is about right from what we're seeing here. So we can see that it's actually almost touching the bottom. So that may be a little bit of a bad sign in terms of it dropping just a little. But we can see that the stock market, the Dow, has actually moved around this area for a while. And that for me is a bit of a good sign. Now, we can see that there's a little bit of gap to be filled, but we can also see that there's a little bit of gap to be filled from the last rally. So I can say that there is a possibility of a slow recovery tomorrow, or a very short bleeding. Now, what's happening here is the market is consolidating, and that's actually pretty good from what it's happening. And you can see as well on the unbalanced volume, whenever the market is going through that, it's actually seeing a bit more green later thereafter. Now, I'm not discussing here whether the massive dip is going to come, whether a correction. So that's a little bit of psychology of stocks. But what I really love about charts is they do tell a story. And I find this one to be very interesting from what I was looking on today. I haven't sold all my positions. In fact, I just went 100% today into the market from 50% cash sitting yesterday. So what are some of the things that you can do in order to stop the bleeding, right? If you believe in a stock, I'm not talking about stocks that have gone 300% at an all-time high. I'm talking about stocks that you actually believe in, and you see that there's potential in them. There's multiple things you can do. Step one, you can just sell at a loss and panic, and you might be right. The stock market tanks the next day, or you might have a bit of recovery or even a dead cat bounce that might get you a bit more green. The second is averaging down, and this one is I like a lot. I hate to see red in my portfolio, and selling really realizes those deficiencies or those red days and puts a hit into my portfolio. So what I like to do is I like to have a safety net. Just hold some cash. Let's say you buy a stock around 0.80. Okay, so if you buy a stock around 0.80, or not even just stock, just put it here in the indices, right? Let's say you buy here around 24,700, and then you dips again, you buy around 22.59. Now, you only need the Dow to reach 23,000 in order to break even. So, in a way, stock, you bought it around 1, it dips to 0.90, and you find a good support. That's very important. You find a good support at 0.90, and you can see that through level 2 data. Then what you can do, you can buy more at 0.90 and average your stocks down. In that sense, you only need to break even, you only need it to reach 0.95, which is highly likely than $1. So this has been a bit of my review for the market today. I can go through the Nasdaq here, but it's basically almost the same case. So I'm just going to go quickly over to that and show you the difference between the Dow and the Nasdaq. Usually they do work a little bit on the similar note. Now, the Dow has been bleeding for a little. The Nasdaq had a bit of better days, but I still believe that the market still reacts around the same. So you can still, the Nasdaq here is a little bit nicer in my opinion. It's been trading more onto for a while between the upper moving average and the purple line here, the mid moving average. And it's currently touching around the mid moving average. And we can see around this period here that it has recovered multiple times around this period. So that's a good sign to me. Now, if we were going around the channel again, oops, I'm actually going to capture the bottom as well. Now, we can see that it probably oscillates somewhere around there. Now, let me try another one where I omit the bottom. Try to see if it actually would. It broke a little bit off the series right here. So it's touching at the bottom phase, which is a good thing for me because that means tomorrow I'm going to be able to identify whether there's even a larger dip that I need to sell out or whether I hold. So in either case, there's a lower chance of me having to sell off and lose it all. So that's basically has been my DD and my review for the market today. Please comment below. I would love to add more DDs into different stocks. I've been a little bit busy today with a very red market that I couldn't make a lot of videos, but I've been able to first try to save my portfolio as much as I can and try to balance things out and end up in the green. So apologies on that, but leave me tickers that you want me to DD in and I'll be very happy to put them on. Thank you and have a wonderful day, and as always, subscribe and like.